Hey everyone, welcome to The Explainer. It's May 30th, 2026, and today we're tearing down a genuinely fascinating setup with KRISHANA Phoschem. Whether you're a seasoned trader or just someone looking to see how market mechanics actually marry with corporate fundamentals, you are in the exact right place. We're going to cut through all the noise and look squarely at the hard, data-driven reasons why this stock is lighting up radars all over the market this week.
So is this chemical stock actually ready to explode? I mean, that's the big question, right? You've probably seen the chatter. The stock is trending with this massive technical breakout, and retail investors are eagerly asking if we're on the verge of a huge upward run. But instead of just riding the hype train, we're going to dig straight into the raw data, the price action, and the balance sheet to figure out what's really happening beneath the surface.
Here's our roadmap for today's explainer. We'll start with the breakout pattern, then look inside KRISHANA's business, cover the sector drivers and trends, do a fundamental health check, and finish up with the intelligent verdict. Let's get right to it.
All right, Section 1, the breakout pattern.
We always like to start where the action is, and right now the action is undeniably on the technical chart. Look at this massive 33-week consolidation period. Basically, from August 2025 all the way to April 2026, the price formed this incredibly tight rectangle box, just moving purely sideways. It was essentially trapped. But recently, boom, a decisive breakout right above that resistance line, backed by a very noticeable expansion in trading volume. That is the exact moment that triggers technical scanners across the market, signaling that a major shift in supply and demand is officially underway.
For our newer market enthusiasts tuning in, a consolidation base just means the stock has been catching its breath. Think of it like a coiled spring. Buyers are stepping in to absorb selling pressure at the bottom of the box, while sellers cap it at the top. So when the price finally breaks out of the top of that box, like it just did, it essentially signals that the buyers have definitively overwhelmed the sellers and taken control of the trend.
And the underlying trend strength here is brilliant. Sitting right at 668 rupees, the stock is within striking distance, literally just about 7% away from its 52-week high of 718.50. The Relative Strength Index, or RSI, is hanging around 63, which shows really positive momentum without being totally overbought. Plus, the price is sitting comfortably above its long-term 50-day and 200-day moving averages, so technically speaking, this structure is incredibly sound and firmly favors the bulls.
Moving on to Section 2. Inside KRISHANA's business.
Because let's be real, a stock chart is only as strong as the company behind it. We need to know what we're actually buying. KRISHANA operates as a key chemical manufacturer within the larger, highly established Ostwald Group. This isn't some fly-by-night operation. They have a serious manufacturing infrastructure already in place, consistently delivering essential chemical intermediaries to some pretty heavy-duty industries.
The big takeaway for us here is that they aren't a one-trick pony. Their core operations span agricultural chemicals, which are absolutely crucial for things like fertilizers and food security, and industrial chemicals. But even more importantly, they're strategically pivoting into higher-margin specialty chemical intermediates. And they're backing this shift with active research and development, constantly trying to create novel compounds that yield way better margins over time.
Which brings us to Section 3, sector drivers and trends.
Every good ship needs a rising tide to truly sail. And the entire chemical sector in India is experiencing some massive foundational tailwinds right now. We're talking rapid industrialization and urban development, which naturally demand immense chemical inputs for construction, automotive, and electronics. Combine that with highly supportive government initiatives like Make in India that heavily incentivize domestic manufacturing, and you've got a massive structural advantage. Plus, there's a huge global shift towards sustainable green chemicals where adaptive companies can really thrive.
But we have to stay totally objective here. It's not all sunshine. While demand is soaring, these businesses constantly battle some severe headwinds. The two biggest risks you've got to understand are fluctuating raw material costs, specifically their heavy reliance on crude oil prices, and increasingly strict environmental compliance costs. Disposing of waste and managing emissions safely requires huge capital, and non-compliance can absolutely crush a company's bottom line.
Okay, Section 4, fundamental health check.
With the macro context set, let's pop the hood on KRISHANA's actual financials and see if the numbers justify all that excitement on the chart. Looking at the key ratios, we've got a market cap of 4,131 crores, putting them squarely in that sweet spot mid-cap space. The PE ratio sits at 22.93, reflecting some solid investor optimism. But what I really like is the debt-to-equity ratio at 0.98. Basically, keeping that ratio under 1 means the company is on stable financial footing to fund future growth without being dangerously over-leveraged.
But guys,
The real showstopper? The number that literally has fundamental analysts doing a double take right now? 152%. When you see a number like that attached to a mid-cap manufacturer, it demands your immediate attention. That 152% is their year-over-year net profit growth. Explosive. You can see sales grew by nearly 60%, which is great, but operating profit and net profit vastly outpaced that. So, what's the takeaway? It proves their operational efficiency, and that pivot toward higher margin specialty chemicals is actually working. It's hitting the bottom line. They aren't just selling more volume, they are literally making significantly more money on every single thing they sell. And let's look at who actually owns the stock. Seeing that promoters hold on to nearly 73% ownership. 72.94% in the latest quarter to be exact, which is actually a slight increase year over year, is huge. It shows immense internal confidence in the company's long-term trajectory. When the founders keep their own money heavily invested, it tightly aligns their interests with everyday retail shareholders like us.
Finally, Section 5, the intelligent verdict.
Let's pull the chart and the balance sheet together for an impartial verdict. The data suggests a genuinely compelling risk-to-reward profile. On the reward side, you've got that confirmed technical momentum, the explosive 152% profit expansion, and strong insider backing. But on the risk side, you carefully have to account for the inherent cyclicality of the chemical sector, the constant threat of crude oil price spikes, and the technical risk that this breakout could just fail and drop back into that 33-week consolidation box.
Ultimately, this is a high-potential technical setup backed up by genuinely solid fundamentals. The numbers firmly support the chart's bullish narrative. However, success here totally relies on monitoring whether the stock can decisively hold this breakout without failing at resistance. Disciplined risk management and keeping an incredibly close eye on global crude oil prices are absolutely non-negotiable.
And that wraps up our teardown of KRISHANA Phoschem. Drop your ticker requests down in the comments below and let us know what company you want to see us break down in our next explainer. We love digging into the setups that you actually care about. Real quick before you go, remember that the stock market carries inherent risks, and this explainer is strictly for educational purposes. We're just looking at what the data on the charts and balance sheets is telling us. Always consult a certified financial advisor and do your own thorough due diligence before making any investment decisions. But it definitely leaves us with one final, provocative question to ponder. As India's industrial engine kicks into absolute overdrive, will agile mid-caps like KRISHANA be the true engines of wealth creation over the next decade? Keep learning, stay focused, and we'll see you in the next explainer.